Welcome to the Explainer. Today, we're diving straight into the sources to trace the massive macroeconomic forces of the current AI boom, taking it all the way down to the actual silicon sitting on your desk. We're going to unpack a fundamental architectural shift that connects the highest, craziest peaks of speculative investing directly to your personal digital autonomy. Let's get right into it. So, check out the staggering calculation from economist Julian Garrett that we found in the research. The current AI malinvestment bubble is an astronomical 17 times larger than the dot-com era. 17 times! The sums of money involved here are just so massive relative to the real economy that the fallout from this could fundamentally restructure how we build and fund technology forever. To make sense of all this, here is our roadmap for today. First, we'll look at the speculative AI bubble. Second, the liquidator VC casino. Third, the SpaceX reality check. Fourth, Prometheus and tech monarchs. And finally, number 5, the Great Cloud Enclosure. All right, starting off with Section 1, the speculative AI bubble. Let's look at the sheer scale of how this hype is totally separating asset prices from reality. Our sources illustrate the current macro environment perfectly. They call it the everything bubble. It's a situation where trillions of dollars in infrastructure investment are being driven by pure narrative hype rather than fundamental, real-world value. The research basically highlights that we're looking at a speculative casino, completely detached from the tangible value of human labor. You know, when everything is a bubble, absolutely nothing is stable. We're seeing valuations right now that are acting as self-fulfilling prophecies, completely ignoring first principles. Which brings us to Section 2, the liquidator VC casino. How exactly does this massive speculative bubble hit the ground level of startup funding? Well, there is a stark contrast between two entirely different methods of funding innovation today. On one side, you have the extractive, strip-mining mindset of the liquidator VC. This operates exactly like a frantic Las Vegas casino floor. They're obsessed with quick multiples, they ride these rapid 2-year speculative hype cycles, and honestly, they treat founders like disposable lottery tickets. But then, on the flip side, is the sustainable philosophy of the legitimacy VC. Think of this more like a vineyard. They commit to a 10-year time horizon to meticulously cultivate compounding growth and build actual lasting infrastructure. Listen to this brutal analogy straight from the sources. They don't really care if the horse is killed, as long as there is one winning. That perfectly captures the immense collateral damage of the casino model. Because when your only priority is rapid scale and artificial metrics, you completely ignore the massive wake of burned-out creators, wasted capital, and disrupted markets left behind. They're literally willing to exhaust the founders and the companies just to find that one massive outlier that pays for all their other bets. Moving right along to Section 3, the SpaceX reality check. Let's look at some undeniable evidence of this casino finally hitting a wall. The crucial point the sources make is that SpaceX is trading well off its recent highs, and it's burdened by a massive valuation of 120 times its revenues. I mean, just think about what your returns have to be if you buy into something at 120 times revenue. Furthermore, their projections show they'll be cash flow negative for years to come. But perhaps the most pressing issue? There's a looming staggered lockup expiry starting next month. 20% of shares are becoming unlocked, followed by 7% intervals, which seriously threatens to flood the market with supply. And to make matters even more complicated, investors are actively dumping long-dated debt amid this massive tech borrowing spree, really doubting if these multi-trillion-dollar investments will ever actually pay off. We're even seeing some frantic internal maneuvering. For instance, Elon Musk is redirecting his Tesla employees to beta test Grok 4.5 internally just to save on token costs. It really highlights the incredible, almost desperate lengths these companies are going to just to keep the momentum alive. Okay, Section 4, Prometheus and tech monarchs. Let's pivot and see exactly how this mountain of capital is being converted into physical reality. Listen to this admission from Mark Zuckerberg. We're building this Prometheus cluster, the first kind of gigawatt-plus single cluster, contiguous cluster for training, talking about many hundreds of billions of dollars of capital. That reveals the sheer physical mass of centralized computing power being amassed right now. The tech elite are literally building fortresses of compute. This isn't just software in the ether anymore, guys. It is massive, heavy, physical infrastructure designed to consolidate processing power at a scale we've never seen. 5. That number represents the mind-boggling 5-gigawatt Prometheus training cluster Meta is building right now in Louisiana, demonstrating the extreme centralization of physical hardware. And they're building several more of these multi-gigawatt clusters. The power requirements alone are literally reshaping local electrical grids, all to feed an insatiable demand for centralized model training. But here's the catch. Underneath all those gigawatts, the sources point out a massive hardware flaw. 80 to 90% of modern AI compute cycles rely on the floating point unit, or what researchers are calling the FPU gambler. The FPU is incredibly fast for sure, but it gets that speed by using approximations. It's essentially guessing the nearest mathematical answer. This creates what's called the wood chipper effect, which is wild to think about. The AI chews up your data and permanently destroys its exact origin. It totally bypasses the strict, verifiable, deterministic truth of the ALU surveyor, which is the arithmetic logic unit that actually provides exact mathematical receipts. So, what does this all mean for us? Section 5. The Great Cloud Enclosure. Let's tie this massive spending and physical centralization directly to you. This centralized architecture forces something called an interface inversion, meaning you are no longer the one directly pulling the levers on your own machine. Instead, a totally opaque, centralized system sits between you and your execution. The tool doesn't just do your bidding anymore, it dictates the terms to you, intercepting your prompts and metering out intelligence like a utility bill. As a result, researchers are warning that you're being transformed from a free explorer on the open web into a captive digital tenant. The sources actually describe this phenomenon as agentic kingship. These centralized tech monopolies are increasingly acting as unaccountable digital monarchs. Because they control the gigawatt clusters and those probabilistic FPU gamblers, they trap users in this automated miasma, where you're essentially forced to rent access back to your very own digital capabilities and private logic. Let's look at how this builds across centuries. The sources argue this isn't just a tech shift, it's a recurring sociological battle over infrastructural power. We go from the 1648 Treaty of Westphalia establishing boundaries, to the 1689 Orange Pledge pushing back on absolute centralization, right up to Paul Revere's Midnight Ride in 1775 asserting undeniable physical execution. And the real focus for us now is that researchers warn we are staring down the 2026 Great Cloud Enclosure. This massive push for centralized AI is being framed as history repeating itself, a royalist counter-revolution trying to pull all execution back into walled corporate garden. The structural battle lines are drawn perfectly right here. Will we submit to the extractive cloud pipe, or will we demand the decentralized edge forest? In the cloud pipe model of digital tenancy, you're basically a caged squirrel being fed nuts by a corporate landlord who taxes and monitors your every prompt. It sounds a bit absurd, but it's highly accurate. On the other hand, in the sovereign compute model, the edge forest, you own the physical deed to your local hardware. You run your own explicit text logs. You act as the sovereign pilot of your own undeniable record, completely bypassing the guessing games of those centralized AI monopolies. So I want to leave you with this final, provocative thought to chew on regarding the future of your digital autonomy. As the very architecture of the web evolves right in front of us and massive tech giants push aggressively for a total cloud enclosure, what role are you going to play? The machines aren't sitting there waiting for your explicit instruction. So will you passively accept this automated miasma and become a digital tenant? Or will you claim your rightful role as a sovereign pilot, saddle up your own hardware, and ride? Thank you so much for joining me on this explainer. Keep questioning the architecture around you, and I'll catch you next time.